What about the length of the construction loan on like a normal conventional loan versus a commercial, right? Are they typically longer, shorter? What's that like?
Commercials, yeah. Residential is going to be usually 12 months. You can get it longer. Commercial is usually going to start at 18 months total term. And again,
which we're getting them shorter, or we're getting them longer now.
Yeah.
Because of delays. Yeah. Yeah. So the commercial loan has to be 18 months at least, because that commercial lender wants to be sure that once this property is done, the buyer has sufficient time to lease it, typically to 90%. Because once again, they're qualifying a business here. And you're not going to build a commercial property and lease it, of 50 units or more in 12 months. You're probably not doing it in 18 months, given how things are going right now. So most of these are creeping up on 24. It gives you time to build and lease and then refinance out of that commercial construction loan. So you said something about terms not being as favorable. What do you mean specifically?
I'm meaning more your long-term interest rate. Usually on commercial, it's anywhere from 1/4 to 0.5% more. Sometimes it can be even more than that, but it's usually a higher interest rate for your permanent financing, long-term financing.
What else? I can think of a few things. A higher interest rate slightly, amortization period.
Mm-hmm. Yeah, you're going to go 25 years.
Yeah.
Some of them have been able to do 30 years,
yeah.
But it's usually 25 years, and it's either a 7 or 10 year arm or something of that nature.
Well, and if you're a big accomplished borrower with HUD might amortize over 40 years, right? With no balloon payment. So the typical commercial loan is, well, we're amortizing this over 25 years or whatever, but you got to pay it off in 10 years.
Yeah.
Right. But on some of these giant HUD deals, and they're tricky, but some guys are really good at them. I've personally never done one. 40 years, due in 40 years, right? That's crazy.
That's insane.
Yeah. Yeah. Got to get some of that capital going. So I think too, one thing that you got to keep in mind is when you have a commercial long-term loan, you're subject to audits by the bank, right? They underwrote that saying, oh yeah, you do meet the debt coverage ratio, but in a year, do you? They're going to want to know, right? So you got to have that dry powder in case you don't, because they're going to require more collateral for the loan. So the advantage on those fourplex loans, I mean, that really has been our bread and butter, is that 4 or 30-year fixed, true, right? Nobody's bothering you because it's only you qualifying for it. Nobody's asking you any questions, and it's an excellent inflation hedge.
Yeah. One thing that I like that we do is with Lane, we get everyone pre-approved ahead of time. So when you're going through our process, you're actually getting pre-approved for your long-term financing, which is a little bit harder to get approved for than the construction. So don't let the construction loan scare you off.
Yeah. Yeah.
Yeah. Just know that the construction loan, like we've talked about, it's more of a 12-month loan, interest only. The rate's going to be about a point higher than the 30-year fix conventional loan. So just know the rate's a little bit higher. You don't want to be in that loan forever. You want to be in 12 months or it's as short as you can whenever the construction's done. And then when it's done, it's just a simple refinance into that 30-year fixed conventional loan.
Yeah, the rate's a point higher. That's assuming, though, that you're going with a bank. Yeah. If you're going with hard money, it's 3, 4, 5 points higher.
Yeah. Mm-hmm.
Right? It's a lot. And I would add, too, that when you get a construction loan through a bank, your terms are usually better if you prepay your interest reserve. If they know that's just sitting in their bank, right? They've got that. They can pull that out every month. That's worth something. I've seen it get a couple of loans across the finish line where they were marginal on it. Well, what if we prepay the interest? Oh, they perk up a lot.
Yeah,
Definitely.
They like that. They have that money sitting there.
Yes, absolutely.
Thanks for listening to the Build to Rent podcast. You are now just a few clicks away from joining our community of Build to Rent investors. All you have to do is follow our show on Facebook, LinkedIn, or wherever you're listening to this podcast. You can also watch this episode and more by subscribing to the Build to Rent podcast on YouTube.